Welcome to yet another show of Reinventing Finance with my co-host Tom and yet another really exciting guest, Andrew. Welcome and good morning. How are you?
Very well, thank you. Good afternoon. It's a pleasure to be with you today. From good morning in the US, good afternoon in Europe, and those around the world listening.
Awesome. Andrew, why don't you, and I guess before we start, for anyone listening, Andrew and I are working together. We're working together in Europe and in terms of technology. So this conversation is absolutely biased for anyone questioning this, just in terms of full disclosure. But to jump right in, Andrew, why don't you tell us who are you and what do you guys do?
Thank you. Yes, I am one of the founders of Insured Nomads. We are a change agent in insurance for those who are living outside their home country. And I serve as a CEO, and we do have our entity in Hamburg in partnership with Nicholas. And we are building products for the new generation of people who are living beyond borders. Those currently are health insurance, travel medical, and other products in the mix that I won't give a glimpse to at the moment, but especially in the area of the self-insured multinational companies, products and services for them. So we are serving what previously would be known as expats in the colonial era, those on international assignment, those known as pioneers in the days gone by. Today, we might just refer to them as nomads or location independent or so many different titles. If we want to stay away from labels, we're ensuring those who are adventurous.
And Andrew, and there's a couple of things that I want to certainly dissect. But how do you get into this? How do you get into insurance? How do you get into expat, international digital nomad insurance? What's your story?
My story goes back to being in healthcare. I graduated and finished undergrad, hired immediately to go into management in healthcare. Then I married a doctor who wanted to move to Africa. So it was from there that situation after situation that we faced with expats, whether it were backpacking Europeans coming around the lake we lived on in Ghana that needed care and didn't have it, seeing people die, being trampled by an elephant on their weekend holiday, not having life insurance, and leaving their wife and kids stuck in a financial situation that was wrong. Seeing the situations that just time after time could have been better. And after moving back, leaving Ghana, going a couple of other countries, living this life, decided change could happen. So I got credentialed and represented about 25 of the leading carriers, from your Allianz to you name it, and saw the insides from the broker perspective and said, okay, after a few years went by, gathered some of the thought leaders and decided, okay, there are several aspects to this, not just the policy that can be improved, but we need to bring this up to today's standards. And here we are, Insured Nomads, protecting those around the world that are going beyond borders.
Awesome. And I think for, at least for me, I've heard the term digital nomads quite a few times. I do have, for me, it's this dude I met on Bali who made his money on gambling. That to me is, a digital nomad that I've met, but expats is something. Could you maybe walk us through certain stereotypes where you would say, listen, this is a group, on top of the two aforementioned, just to make it maybe and I know that you have, but for a little bit more tangible of the different types of archetypes, if you like, you guys are serving?
Yeah, it's, one of the most recent customers that I spoke to was, he was in his 60s, wealthy, businessman that travels a lot during the year.
Hmm.
And most of his trips are less than a month long, but he's managing his companies in his home country while he's out doing things in Liberia and other places around the world. And he doesn't look like the same type person that is, you know,
Not the
29.
guy on Bali. That doesn't. The guy on Bali who was making his money gambling did not sound
Right. He doesn't look like the real estate tycoon that happened to be in Liberia serving people at 60 years old.
Yeah.
Doesn't look like that content writer in Bali that is 25 and snapping pictures of herself surfing. Although I bet a lot of those are working 16 hours a day, and they're doing that occasional weekend picture and rotating it
Yeah.
many times on their social media. So, you know, my view of it as on that negative side, the trailing spouse, the accompanying partner. Because many times in this life that I've lived, my wife would get a job offer in another country. We'd follow it. I'd be the expat, the gringo, following behind a very talented wife that would get an offer. And here I would be stuck thinking, what am I going to do with myself? What is, um, what's going to be my income? And I'd have to recreate that, whether it's finding a job that I could work remotely throughout the years or, um, you know, creating a role, consulting. And that's where people are finding themselves today. Now that companies are saying, governments are saying, you can work anywhere. They're deciding, okay, I don't have to wait till I'm 60 to move to Prague. That dream of moving to Prague can actually happen when I'm 45. I'll just keep the same job and we can go ahead and move there. So as society is changing, our global workforce is changing. The demographic of what the last 10 years, 15 years of digital nomads looked like is shifting drastically.
I think that's, if you don't mind, maybe let's dig in. Like because I do feel that with Corona, etc. Let's just try to go through that scenario. Maybe you can walk us through all the beep that someone needs to go through, and to do that. Let's say I'm working in country A for my existing. Let's just take Europe for example. I'm in Germany. I'm working for a digital company. I have internet access, etc. I could go to the office, but I don't need to. And now I say, you know what? What would be really cool is if the pandemic permits, to spend 3 months in Portugal. I'll still work. I'll still do that. If I wanted to do that, what are some things some unintended hurdles that a digital nomad would have to go through? And not insurance related as such, unless that is a really high priority. And then we can go into the types of products. But I think it would just be interesting for people that it's obviously more than just booking a ticket, booking an Airbnb, being there. There's some red tape following you. Could you just kind of highlight the key stumbling blocks?
Yeah, of course, my first thought is if they're from Europe, have they registered for their EHIC card?
Mm-hmm.
Spending 3 months in Portugal. Because they may just assume because they're European that they have some reciprocal coverage in place.
I would have assumed.
Yes. So register so that you do have that European governmental reciprocity for health insurance without having to purchase any. But also, if you're going for 6 months, most could qualify for going and getting a national plan in Portugal. But taxation is one of those top issues.
Yeah.
Knowing where or how many days in a country you'll trigger a tax liability. Preparing emotionally, though, a lot of people feel like that going to another place, their troubles will go away because everything is better in another place, right? And we operate better when we're on vacation. It's going to be just like that.
The food tastes
really,
much better. The wine is sweeter. The experience is greater.
Yes.
Yeah.
Yes. You don't have any home repairs. You're staying in wonderful places, eating new food. But then the unexpected happens. You have to go back unexpectedly. You've got to deal with things from a distance that are difficult. You know, so many things can happen, relational issues, and you may need a therapist, but the local therapist doesn't speak the same language. So you just skip that process altogether. I would say many times it's the cultural differences that brings out our weaknesses when we're crossing borders. You know, having spent a lot of time in Germany myself, Netherlands, England, you know, Thailand, Brazil, Mozambique, Netherlands, Ghana, excuse me, and a few others. It's that thing where my kids have traveled the world. We've lived to work across five continents, and I've got a lot to learn about it because I still assume that I know what it's going to be like, and I don't. And those assumptions kill us or weaken us.
And no, please, Tom.
May I ask you about the size of this, let's say, group? If you take, on the one hand, we have these archetypes, and on the other hand, a lot of people will think, okay, after Corona, after the COVID crisis, there will be an enormous amount of people who want to travel the world. Do you have any numbers how big the market size of this group of nomads is?
Yes, actually, back in 2015, a guy named Peter Levels predicted that there would be 1 billion digital nomads, 1 billion by 2035. That was in 2015.
Mm-hmm.
And, you know, a digital nomad by definition is just someone who has the ability to work digitally. It doesn't mean that they actually are living outside their home city. So putting that in perspective, that isn't meaning that it's someone from India working in Dubai from their laptop, or someone from Morocco living in Spain. That's someone who has the ability to go, whether they choose to or not. There's a survey that came out just fairly recently saying there are 4.8 million US citizens that identify themselves as digital nomads by a firm called MBO Partners. And of course, with the
smaller though, right? There must be exponential growth in the next 10 years because 1 billion to the total population, 4 million, what is it, 200? Oh God, I should have checked, but
300.
How many inhabitants does the US have? 283? I don't know.
I would have to check on that. But yeah, yesterday even I was reading that 47% of Brazilian youth want to leave Brazil. 47%.
But let's say if you're pitching this to an investor or someone, what's your TAM, what's your serviceable market? Do you have like a number that you say, listen, this is currently what we're going for? Do you have such a figure that you could share?
Yes, the market, one, for those who are, many people just say, okay, they're leaving the country, so they buy travel insurance.
Sure.
Because they, you know, it's a lack of education of realizing, okay, travel insurance is really meant for a trip. And most people aren't tripping when they're going into this lifestyle.
Bali, they might.
True, or going down to Peru for some, yes, on a mushroom trip.
Yeah.
So, yes, so it's an interesting demographic in that whether you come from a country that has a great healthcare system, that you know that if you're going to be diagnosed with cancer, you're going to go back home because your government program will pay for you. Mm-hmm. There are a few misnomers there because if you've been gone long enough, your program back home won't cover you because you've lost its benefits. So if you're Canadian, you need to be there at least 6 months during the year. But many times Israelis, they may buy travel insurance year after year, knowing that their system will cover them if they get a major diagnosis. So the travel segment covers this new nomad. And when I say the new nomad, it refers to the traveler, long-term traveler, those who are saying, okay, I'm going to try it for 3 months and it becomes 3 years, becomes 30 years. They become known as the expat and the immigrant in the end. So that's that blend of immigrants, the Lebanese entrepreneur that goes and opens a grocery store in West Africa. They don't see themselves necessarily as an expat. They've relocated there permanently. They've become a local, but of course they're never a local. And so it is hard to put a number on that, because a lot of times you get numbers on how many people are international assignees, those that are going with Unilever to be the country
manager. How many are those? Just as one figure, how many roughly?
You know, I would need to, sorry, say again?
It's just to kind of, 1 billion, 47%. I just kind of get a feeling of this figure, and maybe, and that you have to stack these together, and you need to be kind of careful that they're not counted, but.
Yes, that's where I was getting with that. It's very hard to get substantial numbers because of those who are getting travel insurance that are not monitored between those who are on holiday, vacation, and those who are going long-term on this lifestyle. And of course, they're not declaring to anyone that they're working from Brazil for the next 7 months as from their computer. So it's very hard to get a number on this. Those who are on international assignment, it's I believe currently about 10 million.
Mm-hmm.
But again, that's a number that as society changes, companies are not putting them on a global benefits plan. They're putting them on a local plan to save. So those numbers aren't reported accurately either.
So, and listen, I think that's absolutely fair. I guess maybe what would be interesting, if it's so hard to put a number on it, what are the access points? How do you get them, right? How do you serve them? Do you buy ads? Do you partner? Do you have specific partners? And then we can go maybe into your specific services that you fulfill now and in the future. But how do you get this ephemeral group?
Yes, that's a great lead-in. Thank you. Because this type buyer is usually someone who's taking care of themselves well. They're not crossing borders because they're sickly and they're not adventurous. They're someone who really has their life together. They're planning, they're risk takers. So with this type product, they feel like they're not going to use it. So they're buying something. How often do you ever go to a store and think, I'm just going to buy some things I'm never going to use? You go to the market and think, I'll buy some food I'm not going to cook, never going to eat. That never happens, hopefully. But sadly, we're actually presenting a product that people feel like they're not going to use. And the second aspect of that, they feel like if they do utilize it, it's going to be difficult.
Mm-hmm.
So they feel like they're not going to get ill or injured. And then if they do, it's going to be a pain. So we've got some major challenges to solve in one, utilization. No, I'm not saying we need to get them sick. We need to make sure that there's value, whether or not they get ill or injured. Because getting people to buy something that they feel like is a waste of money is a challenge. Especially when you're dealing with international health insurance that may be 3,000 euros a year.
Okay.
Well, by that times a family, you may end up spending 15, 20,000 euros a year as someone sails around the world or they're on an international assignment. Multiply that times, 77 oil and gas workers off the coast of Central America. That's, 300,000 euros a year. So providing value that goes beyond medical in an industry that is strictly medical.
Can you give us an example?
Yes. One, well-being. that's one of the key aspects of crossing borders, is that emotionally you're affected by all these new aspects of life, whether it's language, it's relational failure, it's local relationships. So many things can happen in these things. Getting a therapist that speaks your language, no matter what language you're coming from, is something that, to build that into a product, to me is essential. And I'm, as a technical builder, building in public for the last few years, that's one of the highest priorities for us, is building in relevant uh, benefit.
Mm-hmm.
So bridging that in a high-tech manner, so that there's chat, there's phone, there are video appointments available to our insureds, whether you're with us for a month or you're with us for years.
Mm-hmm.
That's a long-term benefit, even beyond your insurance policy with us. Building in cybersecurity benefits. You're crossing borders. You're checking your bank balance from your computer in places that may not be as safe as you realize. That's an essential. It's vital, and that's included with all of our insureds, all the way to basic things like access to airport lounges when you travel. That's yeah. Go for it, Nick.
And so that's the benefits discussion, and I'm sure there's so much things to decouple and delayer and to find out which segment, and I fully get it that it's about accessibility, bundling, complexity reduction, and there's so many benefits I believe out there, and probably just I would imagine there's a whole level of underinsurance, overinsurance with all of these schemes, etc. What I was just coming from the question of if it's so difficult to get concrete numbers, and what I meant is, how do you get to these points? It's basically, do you target, are there specific keywords on Google, or do you say I go to the employer who is sending expats across. I go maybe to these new companies who are positioning as employer of record. I go to travel agencies. So what are the touch points that you try to position where you feel that insurance product, which to be fair is the same for most insurance products, unless it's a mandatory buy. I agree that probably life insurance and health insurance, if not mandatory, have a higher psychological hurdle than mobile phone insurance.
Mm-hmm.
Right?
Right. We spend our money on what we value. So a lot of times we value our phone more than we value our life. Ooh, that hurts, but we insure our phone more than we insure our life.
Yeah, it's funny that you have more. You might have mobile phone insurance, but forget your disability insurance, right? So
right. So specifically to your question, the logical distribution network for us is the broker, the intermediary that represents the multinational company. And that goes on to yes, the Willis Towers, Watson, the Gallagher, One Digital, those
that represent going to be Aon, but yeah.
Yes, Aon, yes.
Until Aon buys them, yeah, okay.
Yes. So it's those, the Meridian in Portugal, in every country you've got those that are dominant in their market, and that's why policy design has to be unique to fit different markets. Mm-hmm. And then passing the regulatory hurdles, as we've just done in the Middle East, but going through the broker, because the human resources manager trusts the broker.
Okay.
The relationship. They think, okay, he's the expert, so we'll listen to what he says. Luckily, we're in a position to where they look at us and say, okay, we know that our customers need these features that they're not getting. The medical is just as robust, a rated paper. So yes, great. Now for the value, we'll add all the other in. Now on the flip side, the consumer is looking, saying, okay, comparing this with this with this, we stand out because of technology integrations that we've built in. So we'll be bringing in consumers through the Google search, through the sponsorship of conferences, through visibility at different things like that, that the consumer does turn to us also.
Okay. No, I think that, and I think that makes sense, and but it means you see an angle both in B2C, and then also various B2B2X models, and there's going to be a blend, but you're going to follow both.
Yes. Embedded insurance, of course, is the trusted way by the consumer, and that is one of the main ways forward, I believe, for many models, not just for insurance and finance, but you have the credibility of the original endorser, per se.
Yep.
What would you say to that, Nicholas, as you've seen embedded insurance become more and more prevalent in the last few years?
Yeah, so I think embedded insurance is really great, but I kind of come from it from a more mechanical point of view. I come from it. It's really expensive in insurance to create a trusted relationship, either by branding, by commercial ties. And the nature of it is because insurance is quite complex, it's low frequency, there's an inherent information asymmetry in getting accustomed to a complex, low frequent product. So I think embedding something into an existing trust and commercial relationship has potentially the advantages of lower acquisition costs that fundamentally need to be borne by the consumer.
Yes, I'll give you a great example of that. My next phone call today is actually with a hotel group.
Yeah.
It is embedding travel insurance within their room rate.
Yeah.
And customers to come to their island. So 100,000 hotel rooms in their various hotels, their various properties. And they want to make the confidence level increase, the trust to be elevated. So they're partnering with us.
Yeah.
So that evac and healthcare is included.
Yeah.
The customer won't realize it at all. It'll be seamless. They're not paying extra. And that's a great picture of the new embed for insurance today.
Absolutely. And I think there's so many ways to play this, and then you can kind of upsell with optional covers. And, if the partner in that strategy wants to create benefit and stickiness, they'll actually pass a lot of the cost savings onto the consumer. They can try to monopolize and extract rent, but that is really a function of competition, transparency, and fundamental of the customer. But no, I can see a lot of these plays happening. I guess before moving on, because I think there's a secondary aspect that I'd like to shed some light in, it's your journey as an entrepreneur, a corporate executive towards an entrepreneur, which I actually think is not as much of a mega trend as digital nomads, but I'll believe that we'll see a lot more really high performance underwriting teams striking out on their own, powered by technology, and then really giving incumbent insurers a run for their money. But anyway, are you the only ones in this market having identified the need, or is there some form of competition? And if so, do you care? Do you have, I mean, it's easy to ask the question. I personally hate to answer it myself on my business model, but not hate, it's just sometimes more nuanced. So who's your competition and how are you different?
There's competition in the strictly medical space, which is blatantly what we're not, because we don't need another. Because medical is cut and dried, very specific schedule of benefits. There it is.
That would be like a Zurich, an Allianz, the big MetLife.
Right, Allianz Care and Bupa, etc. Great products. So if you took our schedule of benefits, lined them up right next to them, you don't compete if you have the same vehicle. The competitive edge is when you integrate technologies, when you have APIs for distribution that you can provide for easy integration. And that's where a lot of our competition hasn't evolved as much. They're stuck with, okay, we've got a good thing going, so why change? Why evolve? So interestingly, there are not many insurtechs within our space. In 2019, when we started, no one within our space was referring to themselves as an insurtech, blending global benefits with technology. Now we have a few that are calling themselves that, but yet there's no visible technology yet manifesting within their ecosystem.
Okay.
But yet, if you look at their Twitter descriptions, etc., they are an insurtech in travel insurance or global health. And I'm waiting to see what the tech side is actually. And that's the ambiguity of referring to yourself as an insurtech, either as a supplier to the carrier, to the MGA, etc., or to as being one of those. There are, there's one that has been in Tangiers for quite some time that's just entered the US market fairly recently called Battleface.
Sounds like a fun Battleface.
Yes.
Here to help you.
Right. It doesn't that yes. Anyway. So they're ones that are coming out saying we're an insurtech. So possibly a competitor. Possibly. Well, it's interesting. In global benefits, I don't see anyone that is emerging yet. There's a lot of movement in companies that are putting themselves up for sale behind the scenes that are on the, they've been around for 20 years. Others that have been around much longer and are on the market. So there are quite a few mergers and acquisitions that are taking place in global healthcare right now.
Okay.
I have a question on let's say how you built the product, because let's say in the past you had a lot of, let's say, big insurance corporations, and then they had, let's say, low risk with their normal clients, and then you had a few clients who were a little bit exotic, and then you said, okay, I have this client, this person lives in Ghana, this is okay, and they said, yeah, it's okay, because they just knew that their
I'll hide them in the portfolio.
of normal clients were just able to absorb this, let's say, exotic risk. So from an insurance or reinsurance side, how does this look like? Because you have probably the difficult situations and the very expensive situation when it crashes, so to say.
Yes. So coming at this from a different angle, with designing the policy and then finding a capacity partner that will carry the risk, to where what we're offering is totally unique, but yet us as the designer and piecing together the different collaboratory partners to fulfill the needs, that risk is primarily transferred to someone else. In the Ghana example you gave, we spent a good 60,000 of our time living in Ghana with no claims. So it might be perceived as, oh no, the risk. We live 2 hours from a refrigerator, and if something happened, the evac, etc. And yes, that does happen. To where you have, but what we're building, and what Nicholas was referring to earlier, is that more and more in the entrepreneurial mindset, we'll be launching lean and agile operations to compete against the giants. Whether you're talking property and casualty, or in the finance sectors, or accident and health, there will be more and more incumbents coming into the market that can offer a much more tech-enabled solution, swifter, and potentially much more profitable as the world continues to rapidly evolve.
But so I think, so basically what you're saying is that it's actually because if you're passing it on to someone else still needs to take the risk, right? And I think the question from Tom was kind of, is there a traditionally kind of a portfolio advantage whereby a kind of normal travel insurer would be able to absorb some of these exotic risks, basically underpricing or substituting them because they are, I don't even know whether they are worse risk or a higher risk, because if they pay an adequate risk premium, maybe they're even a better risk.
Right. The risk is spread, it's measured accurately. So, you know, according to utilization, the profit is still substantial, even though you do have those high payouts. To measure that with utilization.
Okay.
Still good.
And I would say probably, I mean, let's face it. Yes, whilst the broker might somewhat push you some exotic risk, a lot of insurance companies on their underwriting is, you know, they've kind of professionalized it, and it's the discretion of the underwriter to squeeze outside of the underwriting criteria, I would imagine, are getting slimmer and slimmer as well. But no, I think that's a fair point. And I think what Tom was referring to, what we found was really interesting when we were talking to Steve from Bought by Many, that it was adding pet insurance to your portfolio actually is attractive for your solvency ratios because of the way the risk is non-correlated.
Yes.
To it. And so that was a very interesting and nerdy answer. That is why we're a monoliner, because as a monoliner, we help someone with a portfolio to balance their risk because they're actually negatively correlated.
Yes.
That was really interesting.
In contrast to that, our clients are asking us, oh, would you give us high benefit property coverage so that they can cover their drone, their laptop, their photography equipment while they're working around the world? And of course, that is very risky because losing your laptop is hard to prove. There's no doctor saying, yes, he was here for 3 days and this procedure did take place, versus, yes, we think he lost his laptop and we think he actually owned a laptop and it was worth $3,000. So that risk on adding another product into the mix during the purchase process for personal property is too high at the moment with the way the world operates.
When I am allowed to ask an add-on question, I still would consider, let's say, from a combined ratio perspective, that's like the cost of your risk is in the end not really fairly priced in the old world. So by absorbing it by the amount of clients. So just to ask a counterintuitive question, it could be interesting for big insurance corporations to give you, let's say, those people who are walking around with their travel insurance for a very long time, from whom they know that they are not traveling anymore. It could also be in their interest to give those clients to you and say to them, Andrew, could you please take care of those, call them and just give them the right coverage because they are not on holiday anymore. And then you would have a kind of correction, which, let's say, would be a win-win situation. Did you do something in this direction, or were you asked by insurance corporations on this?
You know, it's interesting because the risk actually shifts significantly when someone turns from a traveler into a long-term lifestyle, because the chances of utilization actually increase. So the cost also goes up, because if someone's going to stay with you for the long term, they may have a child. They may actually go to the doctor and get diagnosed with diabetes, or go in with that headache that they've had, and eventually it's diagnosed as a tumor. So when I hear your question, I think, okay, there's converting someone over from travel insurance into a healthcare policy may not actually be a cost savings in most, will not be a cost savings in most cases, because of the length that they'll stay with you.
I think from a purely distribution perspective, though, it could, because I remember there was a regulatory review in Germany about that, and some really big travel insurance players, they extended their travel insurance license to go in the gray area of expats and people actually living, rather, and it's different. A travel insurance is different from the product and licensing perspective than what you need to do with a healthcare product in terms of reserving, etc. And so they were kind of structuring the products differently. And then the regulator at some point said, no, you need to flip. So I think it was basically, if the risk shifts and the insurer wants to adequately price it and be within the realm of regulation, it could be an interesting entry point for you to flip them into a more adequate insurance product.
Yes, I think
even though the client has to pay more, they just have to be adequately priced, and that could be an interesting income, distribution stream, I think is what Tom was alluding to.
That does. I think about the Latin America, where many travel policies may cover 50,000 or 70,000 in coverage, where that isn't adequate when going to many countries. You end up with having to have a major surgery that hits 100,000 euros, $100,000, and the average travel policy across Central and South America doesn't go high enough. So that's where my mind immediately went of global health policy would at least be €1 million in aggregate value, where travel policies on average are so much lower, whether they're embedded in a credit card or is sold by a travel agent, that are not adequate at all.
But was there anybody asking you? So if I would be, let's say, Allianz, and I would have, I don't know, a few million customers, then I just know, but nobody talks about this, that let's say their whole sales force or insurance agents, they have a certain amount of Germans traveling on a travel insurance, but that's not the right coverage. They should have another one. So if I would be Allianz, I would say, okay, that's too specific, that's too complicated, that doesn't make sense to educate our agents on such specific topic. Let's do an analysis. I would give Andrew and his Insured Nomads company those. I'll just do a tryout or a trial or a test, and I would give you the travel insurance policies of those people who are traveling for, let's say, a serious amount of time, because I think they are not travelers. And then I would be very happy, because those people, in the end, if something happens, they will argue that they are not advised in the right manner, and they should have told them that the insurance policy of a travel policy is not meant to use it in that way, etc. And they have a lot of mess, a lot of reputational risk, etc. So I was just wondering, are there also from the other side big corporations coming to you and say, we know we have something where the clients could be much better covered. Could we do a test with you?
We're expecting it. You actually did pick an excellent example. Allianz provides a great side-by-side on their website. So those coming in for their self-consultory experience, as they read, they see, okay, I'm not going on a short holiday, so I need expat health insurance. I need long-term international coverage for 5,000 euros a year instead of something for 400 euros a year. They're one of the few that give a great explanation of which do I choose. Most companies are slipping by of, okay, we know that you're on the cheap side, so just get travel insurance. Mm-hmm. And the average consumer is probably thinking, okay, I'm going for 9 months to Colombia and Argentina, so I'll get some travel insurance. where it's going to fly them back home, wherever that is, where they don't have coverage potentially.
Yeah, okay.
So the risk is high. But yes, we do anticipate more and more collaborations with those who don't have products that we've developed, so that one, it could be a property and casualty provider saying, you know, within your app, where they're checking their policy, their auto insurance policy, and it says, hey, next time you travel, click here and get travel insurance. A co-branded private label experience to purchase. So yeah, the opportunities for partnership, as you referenced, they're increasing more and more as the world is becoming aware of the needs, especially as illness has been in our face through this pandemic.
Yeah.
Our frailty has been right in front of us.
And no, I mean, I think this is such an interesting topic, and I could just, anyone interested, you know, just to reach out to you and kind of engage in a dialogue, because I think this is going to be, you know, really big topic and lots of layers. Conscious of time, I just wanted to pick your brain on a kind of last, or on a different thread, and link this back to, you know, you having and basically just your opinion, because from what I've stated earlier, where I believe there is, in big corporates today and in insurance, there is a lot of underwriting distribution talent, right? However, up until previously, it was really difficult to scale these operations up, because broker technology was not really helpful. MGA technology has really just been built over the last 5 years because there hasn't really been demand for it. So my prediction is that the MGA as a facility to create and distribute products is going to increase exponentially, and it will be not the cool kids, you know, from Berlin, London, or Silicon Valley. It'll be seasoned insurance executives who just kind of go, listen, this is really good. Probably even beefed up by private equity, because the insurance who are kind of attacking this space. Do you see that as well? Am I oversimplifying?
I look in the mirror. I do. I see that. You're describing us, but yet I do see that the analogy of my great grandfather in this. Back 120 years ago, he had his horse and stagecoach type, you know, this carriage that was filled with everything from medicines to clothing to you name it. And he was the store for a large area that would pull up to people's farms and offer everything they needed. And, you know, 10 years, 20 years went by, and he opened a store. And that store was large. I've driven by the site of where it once was, and we have, you know, photographs of it, and I, you know, with pride thinking, wow, a store. But fast forward, he would never have realized that you could have a network of stores and trucks that would deliver to your network, or an Amazon, a Mercado Libre, a network of warehouses where everyone can sell. Yeah. You don't need a store. Or drop shipping, to where it's private labeled, white labeled with your product, and you don't ever even touch it. You may not even see what you're selling.
Yeah.
So in that comparison, insurance, financial services have and will be shifting from the giants, the legacy carriers, the underwriters, into the hands of the public that can say, you know, we can bring in some thought leaders. We can bring in change that's needed without having to have the approval of tens of thousands of people on our team. And we can move a whole lot swifter to deliver what the consumer is actually demanding versus what has been profitable year after year.
Cool. I guess conscious of time, maybe to wrap this up, because we could go on. Is there anyone in particular? So who would you love? You know, imagine there's this insurtech ecosystem listening. Who would you love to reach out to you? Who do you love to get in contact with?
Really, it's a season where we've delivered a product that is, I believe, so much superior due to our partnerships, including actually with Casco.
Yes.
To be able to embed a smooth process within their environments, whether it's a PEO or a broker, network,
PEO,
professional employer organization, a employee outsourcing, employer of record, entities such as remote.com, which is one of the best, based a great Dutch leader with that remote company, as remote being the name of the company, but globalization partners, those sorts around the world, which exist in every country.
Yeah.
So that we can offer the benefits. But then through the tourism, the travel, and the broker relationships, those are the people that we want to talk to.
Cool.
As we develop regulatory, we pass the regulatory hurdles in each environment, we believe that they will value the things that we've brought to the table. So thank you for that question.
My pleasure. Andrew, thank you so much for your time, and I can just recommend anyone to reach out to you and pick your brain about digital nomads, their insurance needs now and in the future. And who knows that one day we'll also meet in person, because very digitally we actually never have met in person. And I can just say I wish you all the best, and see you in the cyberspace.
Very good. Thank you, Tom. Thank you,
Yeah,
Nicola.
very good.
Thank you so much.
All the success.
Bye.